Good morning, guys. Give me just a second here and I'll be set up. I need to post a chart real quick. Okay. How's the, I know the audio is good. How's the video? Can everyone see the chart clearly? Okay, great. So the first thing that I wanted to do really fast, if I can pull it up, is look at yesterday's before we go into today's really fast because I didn't have a chance to do a trade review. Let's see here. Pull this up quickly enough. Well, while that's taking its sweet time to pull the data, not sure why it is, but that's fine. Here we go. Okay. So yesterday with the gap down, obviously one of the ways that we tell strength is by its ability to get half gap or gap fill. Essentially, Friday's low was half gap. And obviously the first thing that I was concerned about yesterday, one second here. Was our ability to get above Friday's low. That was pretty much key. It's going to be key to getting, obviously, any traction back to the upside in terms of retesting the higher levels, right? On the downside, the way that, once again, this was the Globex low area, and you see that we trapped right out of the gate along with NQ for a move back up to the upside 15 minutes in. It was a bit tricky for those who missed it. The only reason it was tricky was that it appeared that we were starting an open drive lower, okay? And it also appeared that we didn't necessarily have a trend day down because we had escaped above the first 5-minute high Normally, what I would have expected was a push up and then this push down, followed by this pattern to the downside. So that's part of the deal with the market. Obviously, everyone knows that. It doesn't always trade like we want it to trade. But you could tell from the rejection at Friday's low that we were going to have issues on the downside. Also, I was pretty clear, if you simply waited till after the first hour was over, the trading day got a whole lot easier from that point in. In addition, one of the things I point out is when a zone gets blown through like this and it doesn't pause, it's pretty much viscous either way through. It'll have no resistance going back the other way either. This zone pretty much became invalid at this particular juncture right here. So this made sense for a move to the short side. This 1857 3/4, I believe was actually Globex high, and this was Friday's low. Obviously, the rejection below was fairly key. Each zone, importantly, for a while now, the zones have been a challenge to get 2 points out of each and every zone. We came pretty darn close to getting that today, with the exception of this area right here. And again, this occurred in the first 15 minutes, which is why I stress, if you'll wait, if you're not a very aggressive, all of us are aggressive traders if we're trading futures. Even if you're not trading in a leveraged manner, the product trades as if everyone participating in it is leveraged. So they're simply aggressive, very aggressive, and minimally aggressive traders. If you're anything less than a very aggressive trader, let the first 15 minutes go. It is hard. Okay. Obviously, we got the trap trade here. It took us right to the other end of the range, which would have been Globex high. Pretty much perfect. I'm not going to spend a lot of detail in terms of how to enter it right now, particularly due to time constraints. First test of this zone, we got a 2-point rotation. First test in this 1841.50 down to 1839. I had to adjust it. I had the open gap off just a bit. At first, I was sitting at 1841 1/4, and I tweeted out I was going to push a little bit further back into the zone. And the reason for that was this consolidation right in front. Now, when we get into directional markets, meaning there is no rotations, we already knew that we had rotations going from this morning, right? But when we get into directional markets, and particularly given this is New York lunch, okay, so this was a harder trade to begin with because of the time of day. It was reflected in how long it took to reject out of that zone. As I said, the majority of my traders, I impress, particularly when you're starting out. Focus between really 8:30 a.m. and 11 a.m. Central Time. Going into New York lunch is usually a chop fest, and/or zones break fairly easily in that time of day. Either way you looked at it, I normally have a 25-minute time limit in a zone. I want to be clear about this because there's some confusion. The job of the zone is one thing and one thing only: to provide a pause to give a rotation back up. But if it does not give the rotation back up, and it simply gives the pause and you can get in and out of that trade with a minimal loss, break even, or small profit, the zone has done its job. The job is simply to get a pause. This zone here did not do its job. It simply blew through each side, and that's fine. No big deal. Every other zone pretty much did its job. We paused here. This was essentially from the first touch, 5, 10, 15, 20, 25 minutes in, okay? Pretty much, unless you took the very, very top of the zone, okay, at 25 minutes, you should have had some kind of profit already going. In addition, you don't necessarily have to close the trade out. You can simply move your stop to the swing low and give yourself an opportunity to attain your profit target. As it was, I entered 40 3/4. Several guys entered all the way back to 39.50, and obviously 2+ points were achieved. Second time into the zone obviously busted. And then first time into this zone, it was late in the day, and I'd given up at that point after trying to find entries back to the upside all day long. But we did get that counter rally. So a couple of points here that are important. First of all, when we're 25 points in the hole and we're 2 big down days in a row with no retrace, initiating a short down here is a really tough thing to do. Go look at your charts and find the percent, and go back to a bear market, go back to June and July, August, and go find the number of days when we had significant down days, and find the number of those days that actually closed on the low, and you're going to find that number to be incredibly small. You can go back, as a matter of fact, for 10 years, and you're going to find that number to be incredibly small. Most trend days down do not close at the low, and most of them are range extensions lower, meaning they move down like this, then they tend to recover and either do a mirror image or close in the bottom third to middle of the trading range. By the way, this was halfway back from high to low. This was halfway back if you grab a fib and retrace it. Okay, so that being said, obviously it was fairly, it was a good day. It was easy to grab your 2 points if you avoided this area the first 15 minutes. There really wasn't a difficulty if you waited till after the first hour. Pretty much this zone worked, this zone worked, and this zone worked. So there's not much more to say than that. This is normal trading. What we've gone through for the last month has not been normal, meaning there's not been much responsiveness because we were in a one-way market, which meant basically we got to the zone, it paused, and broke. So that's good news. I expect to have my P&L increase significantly over the next month, which is great. Let's go over to today and do the executive summary. Okay, pretty simple. Let me see what we're trading right now. Okay, so we are at 1838 right now. Which puts us right at gap fill. This is Globex low. This is, there's an open gap right here. So normally I would have the zone a bit behind the open gap, but I pretty much figure the way they're going to trade that is they're going to get to Globex low and find responsive buyers to attempt another push back up. And I'm not sure how far that push will go. It is important to know that this area, right up until here, all of this is, with the exception of this one little area right here, is poorly auctioned. What that means is it'll be fairly easy to slip through this entire area. That's why there's no zone in the middle, and it's also why I pretty much did not put a mini white zone in this area. I will not be trading gap fill today, whether it works or not. There's just too much of a risk that we either run up back up to Globex high and or back into this area here. Okay, so where I'll be taking longs today is depending on where we open, if we can hold up here at 1839, 1838 towards Globex low, I will be looking to take a long. I won't be taking the front of the zone. I am looking to take the back of this area, assuming a gap fill. It is not unusual, given the nervousness of the market, that they will push. So I'm making a slight alteration from Globex low. I'm going to push my stop back to 3 points here. Either adjust your trade size if you're uncomfortable. I will probably miss the trade if we bounce off of this area right here, and I'm all right with that. But my concern is, if you'll look at the price action yesterday, and I'm going to show you what I'm talking about. My concern is, like when we got into this zone, it got a little flashy down here, and it got a little flashy down here. And so we can push just behind these zones. Same thing here. It kind of gave a quick push, and then it pushed back up. And so that is my concern right here. I'm not overly concerned about it, but it's enough so that I'm going to give it an extra point. I'm simply, okay. And so people ask me through the course of the day, particularly my coaching clients, am I still going to take a trade at point X when I said I'm going to take it? Like, for example, when we get down here, so I want to address this to my coaching clients in particular. Yes, when I say I'm willing to lose money here, okay, unless I see something dramatic, like open drive lower, I'm pretty much willing to take a shot right here. Also, I'm looking for a trap right here. So if we get below and we close back above, we hold Globex low, it would not shock me to see a trip back up to Globex high if that occurs. Okay, so again, you have to manage the trade, take scales along the way, but it would not surprise me to see a move from low to high today back to the upside. Also keep in mind, I think we're 60 points almost in the hole from swing high. So a retrace is normal, even in a, for lack of a better term, a bear market. Okay, so the one thing that I want to point out is this move at the end of the day. Right here, this move at the end of the day is very common. This is a strong move. This is from 34 all the way up to 45, just past 10 points. But the point was, look at the lack of rotation here. The reason why these occur is everyone gets bearish. They all sit and push their shorts and or bail on their longs. They realize they're long, and everyone has to squeeze back in. When the squeeze is done, it rolls back over. But this is the biggest, this is pretty much outside of the opening hour. This was the biggest straight push in one direction that we had all day. Okay, and so what people get comfortable with is they see these little rotations when they're trading, they can go, oh, I can just take these 4-point rotations to the downside. This is why I stress, give yourself plenty of room on the rotations, because short squeezes can, and I can promise you, are going to be vicious throughout this, both on small scales and recoveries back to the upside. Also keep in mind, I would not be shocked to see us have 4 or 5 down days in a row here. Okay, there's, if you'll notice, the stream has gone incredibly quiet on bulls, which I kind of find humorous, but that's fine, whatever. The point is, it would not shock me to see a bigger shakeout than we've had right here, and I would be trying, I will be trying from areas above to, I will be leaving bigger trailers for moves back down, and if we can get back up, I'll actually be looking to put on some put positions from those same zones, given that the circumstances set up correctly. So let's go through this one more time. Okay, so on the downside, let's see where we're looking here. Okay, obviously I'm looking to take a long right from the back here, unless I see open drive lower, and then I'll have to see it visually in order to take a trade back to the long side. I will be taking a long at this 27 to 29 area, preferably again because the pushes to the downside. It gets tricky like this. It depends on the velocity. Okay, so two things: if we consolidate in front of a zone like we did yesterday, I try to push back further into the zone. If it's more of a direct move down, I'm usually inclined just to take the top of the zone and take the heat back to get my 2-point rotation up. I'll be scaling in this particular case unless we get stretched relatively quickly, but I will leave a portion to set up a trap trade from this zone. Same thing with initial support. I will be taking along here. I want to point out underneath here, there's a lot of really poorly auctioned areas on the chart. So this 1816 to 1814 is the last bastion of well-auctioned area. Again, we'll be nice and stretched there. We'll take a long. And there is support right here, basically 1810 to 1811, but it is tiny. This needs to react out of this area very, very, very quickly. If you'll go back a couple months ago, we bounced out of this area before temporarily breaking lower. And then this 1804, 1806. However, from 1811 all the way down to a 1794.96. This entire area, okay, is poorly auctioned. What does that mean? It can get very slippery through here. Rotations back up can be small, okay, and even if we get to bounce back up, it wouldn't be surprising to see a bounce back up and then a push lower. I don't expect to get to 94, 96 or anywhere close to this area today. It'd really have to get panicky. I don't think it's going to happen, and we're due a balanced day, by the way. So it's unlikely or uncommon to get 3 long liquidation days in a row. It can happen. Obviously, NQ will be the key to that, but NQ's already showing strength out of the gate. We're plus 650, and I'm going to keep a very close eye on how that trades today to see the strength. We're due a bounce, but I don't think we'll get the bounce necessarily today. I think we'll get balanced today is my guess. So on the upside, let's talk about that. That's a little trickier. Okay, the white zone's right here, 1851, 1853 for today. That'll have us just below Monday's high, but it'll be a decent stretch up from the from where we're trading right now. That's 1838 all the way up to 1853. I would expect responsive sellers the first time into this zone. Okay. Also, this 1846 to 1848 where we had responsive sellers. Again, that's about halfway back from yesterday's high to low. The first time into this area, I will be taking a short. I do want to point out one thing about this 1843.50. Okay, so the zones are 2 points wide, but the Globex high is actually 1843.50, and due to the fact that we're so sold off, unless I have visual confirmation, meaning I see the zone stop or pause, and I have no way of explaining that. That's simply a matter of experience and watching the dome and price action. If I see it pause, I'll enter before that, but otherwise I'm pretty much aiming for 1843.50, and I will take a 2-point stop from the back of that, and if it happens, it happens. There's nothing I can do. On this zone right here, I am, hold on, let's see. Actually, I am willing to take a short from this area, 1846, 1848. I'm definitely willing to take a short here, and then again at Monday's high. I do want to remind, okay, so one thing I do want to focus on is when there's too many bears that get trapped, even in a down market, the moves back up can be vicious, meaning we can cut potentially through all these zones in kind of a straight up manner. Because of the damage, I would expect a rotation lower as we go down, but it would not shock me to see a range extension up followed by a push back lower. Okay, and I will be looking from range extensions up for rotations and failures back to the downside. Bigger picture, this area up here, okay, so I want to let everyone know there is a zone at 65, 67, but this area was poorly auctioned here, so I removed the zone from my own chart. If you want to put the zone in, you're welcome to. I will, I have other ways of entering if I need to in this area, and so I'll be using some more advanced tools, specifically looking for patterns where I can have a low risk entry right here. But this whole area is prime for rejection, particularly this red area right here. I'm willing to take a loss in this zone, which pretty much means even if we surpass 25 minutes, I will simply move the stop to whatever that swing high is. I'm willing to take the loss there. That's just all there is to it. It's a great place to get rejection. First time in. However, this becomes critical above Monday's highs and Friday's low. We need to fail back below. This is also a potential area for a trap trade. If we get back below, we could obviously push back down towards yesterday's lows, and I'll be looking for this pattern. Hopefully, in a dream scenario, this is what I get set up. This entire area is a great location for getting responsive sellers back to the downside. I will be taking a short here, almost no matter what, short of me having hit my stops for the day. In this area here, again, I have no clear way of defining this other than to say that there is a zone here, but I think it's weak. And so I'm simply going to leave it off the chart to eliminate confusion. And if you miss it, you miss it. That's all there is to it. If I miss it, I miss it. I'm not worried about it. Worst case scenario, I'll still have an opportunity to catch a trap trade back to the downside. Again, I'll be keying off of NQ to see what kind of strength there is. Also, mind the whips can be significant on a balance day after the size move we've had, meaning we can still have balance and have a 15 to 20 point range. So let's see what that would look like, right? So balance, normally, how am I doing time? 8:13. Balance normally looks like this. Okay, there's several variations of that. It can look like, and it can look like this. Okay, it can be downside balance, upside balance, or simply neutral, right? The key identifier to having a balanced market is plus or minus 500. Now you got to put that in context. If we have a 20-point range, let's say we open at this 1838, 20-point range can give us several different looks, right? We can come up, extend up into this 1848, or even up into this 1853, and come all the way back down to this 1833 and balance like this all day long. Okay, that's a huge range, plenty of trading opportunities, also plenty of opportunities to lose money if you do not exercise your trade plan well. Okay, so what are the other options? So first of all, we're looking for possibility of open drive higher. How will that be categorized? It's never identical, but the easiest ones to identify are open, 3 bars straight up, first 5-minute bar being the low, lack of counter rotation. That was key yesterday, right? We way exceeded that two points that we normally expect in a trend day down. That was your first clue that we weren't necessarily starting the day off in a trend down format. Secondly, let's see here. The other bar can be straight up, followed by 2 pauses like that, and then we tend to trend higher. We do have econ at 9 a.m., 10 a.m. Eastern, 9 a.m. Central, and we can get kind of this whippy motion before the econ, and then push higher from there. It's a jobs number. I don't interpret economic data, but obviously since non-farm payrolls for 2 months in a row, strong jobs have indicated a following up of a weaker market, and the reason for that is that would obviously cause Fed to have a quicker withdrawal of QE. That brings in more sellers. I do expect to get rotations down to the downside because there are people trapped all up here who will be relieved to get out of their positions. So let's see if I have anything else that I need to cover. I think I covered the zones where I will be taking shorts. This area right here, by the way, guys, okay, for guys that have harder times trading when the market's fast, this area is much harder to trade than the areas outside of that outside of Globex high and Globex low. These are much easier above, and they are much easier below. They're cleaner trades. Okay, so you've got to ask yourself when you're setting up these trades. Too many traders try to be super trader. Okay, I've been doing this for 20 years. I'm good at it. I know how to make money doing this. Losses don't bother me. Stops don't bother me. Bad days pretty much don't bother me other than for a couple of minutes. I come back the next day and I'm just fine. Okay, but newer traders, this can shake you. If you take a trade here and you get stopped for 2 points, okay, you take a trade here and you get stopped for 2 points, it can actually totally shake your confidence. How do you overcome that, right? Well, the first thing you want to do to overcome that is look for a 10-point stretch in either direction. That means if we open at 1838, 1848 is your easiest trade location, right? If you take a stop, it's only a 2-point stop. What's the price of doing that? The price of doing that is if we come into 1846 and we rejected 1846 back down, you missed the trade. It doesn't matter. I have a gentleman who I'm coaching right now. So I don't want to say he's had a harder time trading the zones, but his consistency, getting consistency has been key to him. So in the last week, not this week obviously, but last week, he ran 3 trades. He made 2 points apiece on each of his trades. He had 6 points. Yesterday he got 2 trades for 2 points apiece. That added up to 4 more points. That's 10 points. It's $500 per contract that he traded. Okay, and he's had no down days. His confidence is growing. His ability to have patience is growing. Why? Just like every other business, he's no longer guessing at where he wants to do business. He knows where he wants to do business, and he's not worried about trying to catch every little move within the hardest areas of the range. I guess that's what I wanted to point out in terms of the decisions you have to make. If you want to trade closer to the open in the harder areas, be prepared to take stops quickly. Okay, that's all I can say in terms of that. Consistency is everything in this business because it relaxes your mind. Following your trading rules and having a planned entry, exit, and stop. My stops are generally 2 points behind the zone. Occasionally I adjust, like in this area right here. I'll give it 3 points, but I will not take the trade unless I can push to the very back of the zone within a tick or two of this area. Okay, what else was I going to say in that line of thinking? Let's see, front of zone. Oh, entries, exits, and pre-planned exit of the trade. Okay, otherwise you are thinking while the market is open, and you become emotionally exposed to the whips of the market. Just let the market take you out. If you have trailers, pre-plan where you want to get out, or pre-plan how you're going to manage pulling that stop up. I generally hate trailing stops. I'd rather just let it go as it comes into the area and sell into strength than wait for me to come back down and grab them. The reason for that is it is very common. Let me show you. You buy here, you're up here, you say I'm going to pull my stop from 1835 up to 1840. All you did was leave 6 points on the table as we rotated back down to that 1840, and you got frustrated. It's better to take 2, 4, 6, 8, or however it is that you're going to manage that trade, then let the market come all the way back against you, and then leave a little piece for a home run if you want to, assuming you can trade multiple contracts. If you leave a piece, whatever you leave for a home run, and I did it yesterday on NQ, if it comes back, there's no crying. Make a decision beforehand and live with it. Okay, let's go over to did a separate chart for the trend lines today. Oh, by the way, clients on the chart I sent out, particularly in the TradeStation file, I adjusted this zone right here. Okay, this is a zone from the red marks the open gap, and it's from the open gap, which is at 1833 to 1835. I think I had it a little bit tighter somewhere up here. I needed to adjust to incorporate this. And let's see here. I think that was my only change on the chart, so please make that adjustment. On the trend lines, I would have this trend line on my chart where we get to break it to the upside. We need a break above and hold above. It would not be surprising to see us break above, come back for a backside test, and then push higher. Also, by that same token, we're opening. Let's spread this out just a little bit. And again, this is a 5,000 tick chart. Let's change it to a 5-minute chart so it's easier to see. Well, here. And it's going to take a minute to get the data there. I don't think I had another chart on this, did I? Okay, here's a 500 tick chart, easier to see. Same chart. Okay, we are opening 1838. That puts us approximately right here. Okay, that downtrend that started Friday is sitting right there. Once again, we don't get above this, there is no up. Okay. In addition, if we don't get above yesterday's high, right, there's not going to be any extended up, and we clearly need to jump over this little area right in here to get any upside. Okay. On the downside, before you get overly bearish, if we don't break the low of the day, there's going to be no significant down mode. The reason why I say this is too many traders tend to get bearish or bullish. Don't. Markets move two ways, and we're back in a two-way market right now. Also, when you're 20 points in the hole, don't look for 30 if you weren't short from down 10 or down 15. Okay, it's very rare to get those big a days, and even though it happens on occasion, on 10 attempts you will lose money most of the time. Even though we close near the low, there's very few traders that can sustain a 10 or 12 point move up, right? The other thing you'll notice, okay, these lines right here, if you'll go back and look on your daily, these are trend lines. I don't have time to go back and show it, but these are trend lines off the daily. They all start from one point and kind of go up. You'll notice that we paused right in front of them each time. Okay, again, I don't trade off those trend lines, but when they line up with zones, they're important. And I did not merge these onto the chart because too many people have told me it's confusing when you see them. And as you can see, we came right to the backside of that in the afternoon and rejected. That also came up from the backside test of one of these uptrend lines that we had. If we get below here, there's plenty of space, actually all the way down to 1821. There's plenty of space. This is the, what is, why, okay, 1831, this 1830 to 31 area, by the way, is the bottom of the prior range. I'll show that in just a moment. But if you look at the bottom prior range, this is the bottom. The top of that range is all the way up here at 1878. Okay, and again, markets don't go straight down, so it wouldn't be surprising even if we broke below here, right? To recapture, trade up to 1878, and that 1878, if you look where that puts us, would also put us right into this. Excuse me, just behind it, would put us right into just past this 50 to 62% retrace from the highs. It is possible to get back up there again. I think it's more likely that we reject out of this area, but obviously it is possible that if we push up for a couple of days, it's possible to get into here and also reject. That is the top. You need to mark that off as the very top of the range, just so you have that. Looking at NQ really quick. Okay, I think NQ actually showed more strength than the ES did yesterday. Certainly, in its, the size of its rebounds, it would not surprise me to see it leading back to the upside as people kind of switch hats when this occurs. NQ can have brutal rallies to the upside, even in bear markets. If you go back and look at the market crash back in 2000 on NQ, from the time it topped to the time it got to the bottom, in between those 2 points, there was a 43% counter rally. Okay, so anyone who tells you I shorted the high and I covered the low back in 2000, they are full of shit. There's almost nobody that can survive a 40% counter rally and stay short through that. Okay, so that's the only warning I can give on NQ. The counter rallies can be brutal. Give it space to the upside if it starts running. Don't try to take the trades and obviously stick a trailer. And obviously my primary trade there is the trap trade, so it's easier to set up.